Hello and welcome to your daily dose of Satoshi's news. Today's date is Tuesday, the 27th of August 2024, the year of 1,000,000 transactions per second or more. That's right. Experience the best of both worlds today at betbitcoinsv.com, the best casino of sports betting on chain. Have a little flutter in private using the original protocol and genuine Bitcoin. Right, let's see what we've got in store for us today. We've got this article by Cointelegraph saying a Bitcoin miner, that's shitcoin miner, Grapecoin miner, Rhodium files for bankruptcy in Texas court. So again, the block fee hasn't gone up, although the price of Grapecoin hasn't gone up enough, to keep them in business. It needs to keep going. Should be worth millions by now, but it's not because they screwed it up. Another one here saying that SEC charges siblings over $60 million Ponzi touting crypto trading bot. And again, I thought I'd read this one because we've seen this with BitConnect and oh crikey, what was the other one? There's been loads saying there was a trading bot. There was another one, a URT, something like that. Anyway, and then we've got just some people speculating over KYC and identity in the wallets, which we'll just discuss because they've got that completely wrong. And then we've got this one saying, Bitcoin Super Value just spotted this transfer of Grapecoin to Binance. And then this one about Binance has seized all funds from Palestinians as per the request from the Israeli Defense Force. They've refused to return the funds. All appeals have been denied. Whew. Dear oh dear. And then, just got some more quotes here that seem really interesting. Some posts here from Craig, an article from CoinGeek that we'll go through, a little bit of Bitcoin history, and that'll be the end of the show. Right, let's get into it.
Satoshi, like a cowboy in the West, riding on the blockchain that they call the very best. 1,000,000 strong, them transactions flying free. Just wait for the Terra node, you'll surely see.
Here we go. So this is a Grapecoin miner, Rhodium, files for bankruptcy in Texas court. Rhodium's debts range between $50 million and $100 million, while its total assets are estimated between $100 million and $500 million. So what, they're having trouble maybe converting them or something? So a Grapecoin mining firm, Rhodium Enterprise, has filed for voluntary bankruptcy under Chapter 11 in the United States Bankruptcy Court for the Southern District of Texas, revealing liabilities of up to $100 million. The filing was submitted on August 24th and includes 6 subsidiaries: Rhodium Encore, Jordan HPC, Rhodium JV, Rhodium 2.0, Rhodium 10 MW, and Rhodium 30 MW. According to the document, the company's debts range between $50 million and $100 million, while its total assets are estimated to be between $100 million and $500 million. How does that work? Rhodium's bankruptcy follows previous reports from reports of financial distress under the company's umbrella. Rhodium Enterprises, which owns Rhodium Encore and Rhodium 2.0, reportedly failed to repay the $54 million in loans owed to lenders in July. In 2021, Rhodium raised $78 million in loans for its subsidiaries. I wonder what for. Two debt structuring proposals were reportedly made prior to the deadline, but disagreements among stakeholders triggered the default. Under Chapter 11 voluntary bankruptcy, the company will be able to reorganize its debts while continuing operations, allowing it to negotiate a repayment plan under revised terms. The Grapecoin mining companies have sought similar protection in the past. Core Scientific, for instance, filed for Chapter 11 in December 2022, citing falling cryptocurrency prices and higher electricity costs. The company emerged from bankruptcy in early 2024. Rhodium is one of the crypto miners severely affected by the last bear market in 2023. Competitor Rio Platforms filed a lawsuit against Rhodium Enterprises to recover the more than $26 million in unpaid fees related to the use of Riot's Winston's Grapecoin mining facilities. In addition, Grapecoin miner profits have sharply declined due to the halving event in April, according to a recent JP Morgan report, which the reduction in Grapecoin miner rewards following the halving has squeezed profit margins, while higher electricity prices further strain miners' financial performance. Rhodium has selected law firm Quinn Emanuel Urquhart and Sullivan to act as a general bankruptcy counsel and Provence to act as restructuring advisor. And again, they haven't figured out that you need more and more people to start using Bitcoin. You need the block fee to surpass the block reward. I mean, have they figured this out yet? Clearly not. So this one then, SEC charges siblings over $60 million Ponzi touting crypto trading bot. The SEC has accused the two... USI Tech was the one I was trying to think of earlier. The SEC has accused the two brothers of using investor money to fund lavish lifestyles, including the purchase of cars and multi-million-dollar condominiums. The United States Securities and Exchange Commission has charged two brothers for allegedly operating a $60 million crypto Ponzi scheme featuring a crypto trading bot that never existed. Where have we had that before? Loads of places. In the August 26th complaint filed in the United States District Court of Northern District of Georgia, Atlanta, the SEC claims Jordan Adam and his brother, Tanner Adam, lured over 80 people by claiming to operate a crypto bot that would net investors 13.5% monthly returns. You can't do that. You just can't do that. It's such a load of shit. The government agency alleges that from January 2023 to June 2024, the brothers told investors their bot identified arbitrage trading, where have we heard this before as well, arbitrage trading opportunities on crypto platforms and could simultaneously purchase and sell assets to exploit tiny differences in prices across different markets. Investors were promised their funds would go into a lending book. I mean, this is how Sam Bankman-Fried claimed to have made his fortune. Oh, trust me, I'm a great trader. I'll do arbitrage trading, so you can't lose. It's just absolute load of crap. Investors were promised their funds would go into a lending pool to fund flash loans and complete trades, with the assets being borrowed and returned within the same blockchain transaction. Oh my, talking absolute crap. Justin Jeffries, Associate Director of the Enforcement in the SEC's Atlanta Regional Office, said the trading scheme was completely fraudulent and the bot didn't exist. Instead, he accused the duo of misspending $53.9 million of the $61.5 million raised. Investors received some money back, but the lion's share was used to fund lavish lifestyles, including purchasing cars and trucks and constructing a $30 million condominium. As we allege, the Adam brothers, this is a quote here, promised their investors high returns on a crypto investment that did not exist, and then used investor funds to make Ponzi-like payments to purchase designer goods, recreational vehicles, and multi-million-dollar homes, Jeffrey said. To hold this, I mean, they got like $500,000, well, just under $500,000 from each of their investors in. To hold the scheme, the SEC obtained emergency assets freezes for Jonathan and Tanner Adams' companies, GCZ Global and the Titan Financial Group. According to the SEC, the brothers told investors that a short of a global market meltdown, the risk to investors was virtually non-existent. The government agency also claims Jonathan Adams misrepresented the background to gain investors' trust and didn't disclose the 3 previous convictions for securities fraud. Oh dear. The SEC has charged Jonathan Adams and Tanner Adams with violating the anti-fraud provisions of the federal securities laws. It is seeking permanent injunctions against the brothers' companies, the forfeiture of all funds taken from investors, and civil penalties. In June, blockchain intelligence firm TRM Labs reported that a combined $7.8 billion was paid to cryptocurrency pyramid and Ponzi schemes worldwide in 2022. This is why you need education, ladies and gentlemen, so you can spot Ponzi schemes. And again, the biggest Ponzi scheme of all is Gregcoin. Like, my goodness me. Imagine, that's a $1.2 trillion Ponzi fraud, that one. Jeepers. Right, let's get into this. So, CryptoCurrent, Crypto Rick has said here, very soon the Metal, Proton, and BSV validators will decline any transactions that's not KYC'd to a digital identity. Bullshit. Your coins will be stranded, frozen, burnt, or clawed back once regulators come out. That's absolute bullshit. An error will appear in your wallet. This is part of the storm, the shakeout. Utter bullshit. So what's this? In reply to what Craig has said here, let's see what he said. He said, in Bitcoin, possession is merely having the private key. Ownership, however, is the legal right to the Bitcoin shown by signing a transaction. Okay, so that means that your digital signature needs to be in with the transaction data. The white paper states that nodes will never build on an invalid block if ownership isn't clear. The block is rejected by the network. So again, you can prove who owns a block and whether if the block is valid, because there will be the miner's signature who won it on it. So again, it's just about digital signatures. Digital signatures link transactions to the owner's identity, ensuring the transfer is valid and legally recognized in the blockchain. So, and again, when you say linked to identity, it's private and ensures the transfer is valid and legally recognized in the blockchain. So what he's saying is there just has to be a digital signature with it. That's it. Once there is a digital signature with it, you can prove who sent what to who, and you can trace it back through the chain of signatures. It doesn't mean a regulator cannot step in and suddenly freeze funds and do X, Y, and Z whatsoever. That is just absolutely ridiculous. This is all about just simply tracing and making sure that every transaction is valid and not a fraud. And you validate it by making sure it has a digital signature on it. Where you can prove ownership with the person that you're transacting with, and it's private between those two individuals. If a dispute arises between the two of them that they can't resolve themselves, they can then present that to a third party. But until that happens, it's not required at all. Bitcoin transactions transfer ownership, validated by digital signatures. Exactly. Possession of a key isn't ownership. Legal rights are essential. So again, proof of keys is not ownership, and Craig's been banging on about this all the time. You need to prove your identity, but you only need to prove your identity if a dispute arises. That's it. And any transaction or any block that doesn't have a signature on it is literally nothing. You're literally sending nothing but data. Literally, it is the signature that validates it. So what he's saying is that chains like BCH and the SegWit protocol are completely invalid. They are securities fraud. He's not mentioned anything here about all this bullshit about your transactions will be declined and coins will be stranded, frozen. But this is bullshit. They can't do that because it's not sent. It is a common network. There is no central point of authority, control, or failure. The miners, as in the mining network themselves, they would all have to come to consensus, which is extremely costly. So therefore, again, the crime has to be worth the economic resources and time that it would take to do it. They're never ever going to come to consensus over just like a single transaction, and they can't just simply stop it. This is fear mongering. It's absolute BS. Actually, it was really quite annoying. And let's see what this one is. So it says, with your wallet linked to your identity soon, again, you need a non-custodial wallet. If you have a custodial wallet, then they have complete control of it anyway. So this guy says, with your wallet linked to your identity soon, and with the unique USB DAR feature, any utilized gains, tax, or other tax can be automatically withdrawn from your BSV account. No, this is absolute crap. Can be automatically withdrawn from your BSV account on a daily or even hourly basis. This is absolute crap. This is trolling. BSV is the only true government-friendly chain. Again, that's trolling. That's absolutely hilarious. But anybody with any brain cell whatsoever is going to know that that's absolute BS. So well done for BTCs just coming up with more crap like that. So check this one. So Bitcoin Super Value said, well, this is interesting. Whale alert, 30,000 Gregcoin, crikey, and that's 1.8 billion. 1.8 billion USD transferred from unknown wallet to Binance. Now, I haven't been logged into Binance for years and years and years. I think when I had an account years and years and years ago, there was a point where you could only withdraw $300 a week. So you could literally only withdraw $300 a week, and somebody has put 1.8 billion in there in one deposit. Now, who or what would do that, knowing that you can't get it out? And again, a completely centrally controlled exchange. Watch this space. I think things are going to get very juicy. And look at this one. So by Ray Youssef, he said, Binance has seized all funds from all Palestinians as per the request of the Israeli Defense Force. They refuse to return the funds, all appeals denied, and somebody's just sent $1.8 billion to them. They can just make any shit up to take your funds off you. Completely centralized exchange. Get your coins off exchanges and into non-custodial wallets. Your funds are SAFU at no one's app though. In accordance with authority delegated to me by Minister of Defence, according to Section 61A of the Law on Combating Terrorism, 556 to 2016 thereafter, the law on the fight against terror, and the further to your application as a reference, I would like to inform you that the claims against seizure of property by virtue of an administrative seizure order signed by the Minister of Defence on the 1st of November 2023 by virtue of his authority according to the law were examined by and rejected for the following reasons. Section 56B of anti-terrorism law states, among other things, that the Minister of the Defence may issue an order on temporary seizure of property of a declared terrorist organisation, as well as seizure of property that was used to commit a crime, serious terrorism, on property where a serious terrorist offence was committed. At the basis of the administrative seizure, Anyway, but there we go. Again, just don't know if that's true, but I'm just saying Binance has seized. So it says here they seized all funds from Palestinians as per the request of the IDF. I mean, if that's true, that's outrageous. But I certainly wouldn't put it past them at all. So let's see what this was. This is from Aldecas. He said, if he is Satoshi, and he went referring to Craig obviously, and went through all this trouble to bring back what was his idea in the first place, the argument that he added stuff goes a bit mute in my opinion. Did Satoshi intend Bitcoin to operate within the legal framework? Digital signatures, anybody? Yeah, absolutely. It's absolutely essential that a digital signature is a chain of digital signatures is continued to make it legally compliant. Absolutely. And some points here from Craig. Craig has said, in a system of good money, as prices rise, people often sell their savings, realizing profits and set limits on spending. This behavior naturally stabilizes the economy. However, with Grapecoin, as the price goes up, the cost of transacting also increases. This creates a barrier, especially for smaller users who face higher fees. And again, if it's inaccessible to the poor, it's neither radical nor revolutionary, as we know. These high fees discourage smaller transactions, again, so it basically makes it an elitist system, limiting users' ability to send or save their BTC effectively. This contrasts with traditional money, where rising prices encourage circulation. In Grapecoin, the increasing cost of transactions makes it less accessible, restricting its use as a medium of exchange for many, particularly those with smaller holdings. Then he's put mass movements grow into gaps left when the family unit is weakened or absent. Without family, individuals may seek belonging elsewhere, creating fertile ground for collectivist and totalitarian ideas to take hold. Absolutely. And Truth Machine has said here, Dr. Wright seems to know about Satoshi's emails with Marty Maui before they were public. Let's see what this is. He said, in 2009, I said I was uncomfortable with explicitly saying consider it an investment in regards to Bitcoin. I noted that this was a dangerous thing to say. It's okay if people come to that conclusion on their own, but we can't pitch it as that. The purpose of Bitcoin is not speculation or store of value. It is micropayments and immutable time-stamped logging. Yeah, absolutely. And the BSV searcher said, is dangerous in a way that the BTC has demonstrated, which is that it will lead to people to just hodl, just watch the price, do nothing to improve the world, stop innovating, and ultimately the chain dies because there's no utility. Is that what you mean, or something else? He said, for a start, it was illegal in 2009. It is still illegal now, and the crypto lies will catch up with them. Yeah, referring to crypto, which is BTC and all that rubbish, as we know. Oh, I'll check it out. I think we'll find this one. So the 11th of June, this was to Marty Maui. Yep, it's like looking there's a lot of people. There are a lot of things you can say on the SourceForge site that I can't say on my own site. Even so, I'm uncomfortable with explicitly saying consider it an investment. That's a dangerous thing to say, and you should delete that bullet point. It's okay if they come to that conclusion on their own, but we can't pitch it as that exactly because financial advice and all that stuff. So let's have a look at here. This article by CoinGeek saying a blockchain in automotive market to grow by $160 million in 2030. If we get that far, Because 2024, and they reckon that by 2030 we'll own nothing and be happy. A new report is forecasting the meteoric rise of the use of blockchain technology in the automotive sector, driven by the need for key industry players to achieve improved security and efficiency. The study compiled by Report Prime claims that the market share for blockchain in this sector is expected to grow from $82.5 million in 2023 to $160 million by 2030. From its present levels, the LEAP pegs the compound annual growth rate at 10%, with several factors integral to the predicted growth spurt. Per the report, the rise of electric vehicles and connected vehicle technologies are key factors responsible for the spike in blockchain applications between 2022 and 2024. Further drivers of adoption will revolve around the need for automotive manufacturers to protect consumer data and from bad actors. Absolutely. Another use case for blockchain is its anticipation in streamlining supply chain management, allowing manufacturers and consumers to track the movement of vehicle parts and their histories. Experts say that the real-time tracking functionalities provided by distributed ledgers will be key in stifling the proliferation of fake parts while reducing fraud. By segments, publicly distributing ledgers will slug it out with enterprise solutions for dominance. With firms weighing the trade-offs before opting for their preferences, firms seeking greater control over data to protect proprietary systems are more likely to opt for private blockchains, while public blockchains will offer firms with the highest levels of transparency. No such thing as private blockchains, really, because a private blockchain is a vulnerable database because it all hinges on a central point of failure. So why would you want all of your data on a single point of failure? There's just no point in it whatsoever. In terms of applications, the largest drivers by 2031 will be vehicle safety and data security, while supply chain use cases will come in a close second place. Applications in the manufacturing will rise steadily as innovation reaches new levels, with new cases in the segment orbiting certification and tracking production statuses. By regional analysis, North America, led by the US and Canada, will surge ahead of their peers, buoyed by considerable investments in the reach and development. The report claims that the cultural acceptance of the technology in North America gives it an edge over other regions in Europe and the Asia Pacific, keen on closing the gap. The Asia Pacific region, particularly China and India, is the fastest growing area, driven by increasing urbanization, demand for smart vehicles, and governmental support for blockchain initiatives, reads the report. Yeah. Okay. Interesting. More markets using Bitcoin. Right. Where are we today? It is the 27th of August. Check this out. So on this day in 2010, Craig Wright as Satoshi Nakamoto famously wrote, "Bitcoins have no dividend or potential future dividend. Therefore, not like a stock, more like a collectible or a commodity." There we go. 27th of August. Loving that. There was also a post here on the 27th of August 2010 where he said Bitcoin does not violate Mises' regression theorem. As a thought experiment, imagine there was a base metal as scarce as gold, but with the following properties: boring grey in colour, not a good conductor of electricity, not particularly strong, but not ductile or easily malleable either, not useful for any particular or ornamental purpose. And one special magical property: can be transported over a communications channel. If it somehow acquired any value at all for whatever reason, then anyone wanting to transfer wealth over a long distance could buy some, transmit it, and have the receipts sell it. Maybe it could get an initial value, circulatory as you've suggested, by people foreseeing its potential usefulness for exchange. I would definitely want some. Maybe collectors, any random reason could spark it. I think the traditional qualifications for money are written with the assumption that there are so many competing objects in the world that are scarce. An object with the automatic bootstrapping of intrinsic value will surely win out over those without intrinsic value. But if there were nothing in the world with intrinsic value that could be used as money, only scarce but no intrinsic value, I think people would still take up something. Oh yeah, they'd have to. There'd have to be something to use as a medium of exchange. I'm using the word scarce here to only mean limited potential supply. And again, I don't know if that actually was Craig, but it's just under the name here of Satoshi in terms of senior founding member. I think that's Bitcoin Talk. But anywho, that's 25 minutes. I might do an extra chart show just to go through the figures. But if you enjoy these updates, please ding your donations for your appreciation to either satoshi@sendme.com, Hangcash.io, Simply.cash, Relasia.com, Rockwallet.me, or Senti.ch. We'll leave you there. I hope you enjoyed it. As ever, be aware, take care, stay safe out there, and we'll see you in the next one.